All right, let's get right into it. Today, we're diving into a real high-stakes corporate drama surrounding a company called AVDL Pharmaceuticals. It's a story packed with breakthrough drugs, surprise takeover bids, and a battle for control that has Wall Street watching every single move. So, picture this. Imagine you're an investor in a really promising pharma company. A solid deal's on the table to sell the company for up to $20 a share. Seems pretty good, right? Then, completely out of the blue, another company swoops in with a proposal worth up to $23. So what's really going on here? What's driving this sudden bidding war? Let's break it down. So, this all kicks off with a really surprising corporate showdown. One company thought they had a deal completely locked up, only to get challenged at the last minute by a rival with, well, a much bigger checkbook. So, in one corner, you've got Alkermes. They're the known partner, the one who had already negotiated and signed an agreement to buy AVDL. And then, bam, in the other corner, you have H. Lundbeck, a Danish firm, who just crashes the party with this unsolicited, significantly higher offer. And just like that, what looked like a done deal turns into this public tug of war. The big question is, what are they fighting over? Well, the prize in this whole battle is a single revolutionary drug, Lumryz. And let me tell you, this is not just another pill. It's a potential game changer in the world of sleep medicine. You know, the real magic here, the thing you gotta understand, is that phrase, once nightly. See, before Lumryz came along, patients with narcolepsy often had to literally set an alarm to wake up in the middle of the night just to take a second dose. Imagine that. Lumryz completely solves that problem. And as you're about to see, that simple convenience has led to some massive, massive adoption. And man, you can really see how this is paying off. Just look at these numbers. The revenue growth is just incredible. From over $52 million in the first quarter to almost $78 million by the third. We're not talking about slow and steady growth here. This thing is a rocket ship. And that's the kind of acceleration that makes any potential buyer sit up and take notice. And, you know, behind all those millions of dollars are actual patients. The number of people on the drug jumped by almost 50% year over year, hitting around 3,400. This tells you the drug isn't just some marketing success. It's getting into the hands of people who desperately need it. And it's working. It's proving its value in the real world. Okay, so now that we get why AVDL is such a hot property, let's dig into the deals themselves. This is where the whole conflict gets really interesting, because trust me, this is where it gets really juicy. The devil's in the details. Okay, before we can compare the deals, we have to talk about something called a CVR, or a contingent value right. Just think of it like a lottery ticket you get with the deal. You get a guaranteed amount of cash right now, but the CVR, this ticket, promises you more cash later, but only if the company hits a very specific goal. It could be getting a new drug approved or hitting a sales target. It's a clever way to pay for what a company could be worth down the road. All right, so here's how the two offers stack up, and this is where you really see the different strategies at play. Lundbeck is offering more cash up front, $21 versus $18.50 from Alkermes. But those bonus payments, the CVRs, they're tied to totally different kinds of success. Alkermes' bonus, that CVR, it's all tied to a clinical win, getting Lumryz approved for a different condition. It's a bet on the science. Lundbeck, on the other hand, their bonus is all about sales, hitting specific revenue targets. That's a bet on the marketing team, on pure execution. And you better believe AVDL's board is paying attention. By officially calling Lundbeck's bid a potential company superior proposal, they're basically sending up a flare. It's a signal to everyone that the original deal with Alkermes is definitely not a sure thing anymore. The door is wide open for a real bidding war. So this is where we're at. Two offers on the table, a blockbuster drug. Where does it go from here? Let's play it out. Let's look at the best case scenario, the bull case, and the worst case, the bear case. So if you're an investor, the dream scenario, the bull case, looks something like this. Lundbeck's surprise bid forces Alkermes to raise its own offer, kicking off a bidding war that pushes the final price way up. At the same time, Lumryz sales just keep climbing, and that big clinical trial succeeds, making the CVR bonus a reality. And to top it all off, they recently settled this big, nagging lawsuit with a competitor, which takes a huge risk right off the table. But of course, it's not all sunshine and roses. There are some serious risks here, the kind of stuff that could derail this whole thing. Either deal could fall apart because of regulators or if shareholders vote it down. If that big clinical trial fails, the Alkermes CVR suddenly becomes worthless. And you can never forget, in pharma, there's always the threat of new competition popping up out of nowhere to slow things down. Okay, let's pull back for a second. What's the big takeaway from all this drama? What can we really learn from what's happening with AVDL? It really comes down to a few key things. When you look at it, AVDL's success story really boils down to 4 key drivers. First, they absolutely nailed the commercial launch of Lumrez. That success, step 2, triggered this M&A battle. Third, they still have a ton of future value locked up in their clinical pipeline. And fourth, they made a smart, strategic move to de-risk the company by settling that lawsuit. It's a really powerful combination. And this really gets to the heart of it. There's this great quote that sums it up perfectly. This is a strategic play. You're playing both for a deal, M&A, and for commercial/clinical execution. See, an investment here isn't just a bet on the science anymore. It's a dual bet. You're betting on a corporate deal closing, and you're betting that the company can keep firing on all cylinders. Which leaves us with this one big, fascinating question to chew on. AVDL has fantastic science, there's no doubt about it. But right now, its value is being hammered out by strategy in the boardroom. So in this crazy world of biotech where cutting-edge innovation meets high finance, which one ultimately holds the trump card? The lab coat or the suit? And just before we go, the usual but very important reminder. This is all for educational purposes. It is not financial advice. The biotech sector can be incredibly risky, so please always do your own homework and your own research before making any kind of investment decision. Thanks for diving into this with us.